Hello Canadians, I'm your mentor Bakar Bhatti, CEO PAS. In this video, I'm going to explain to you the concept of GST HST credit that may be of interest to most of you. This video is only for educational purposes. However, if you need any specific advice on accounting, tax, or any other related matter, you can always contact us at 289-952-3494, or you can send us an email at pascat2017@gmail.com. The scheme of presentation is that first of all, we'll look into the nature of GST HST credit, then we'll examine the eligibility factors, and finally, I will demonstrate the calculation of GST HST with simple illustrations. Now, what is the nature of GST HST credit? Basically, this is a non-taxable quarterly payment that you may be entitled if you belong to low and modest income families. And the purpose of this benefit is to offset all or part of the GST HST credit that might have been paid by you during the past year. Now, what are the eligibility factors? First of all, you should be a resident for tax purposes to be eligible for this benefit. And then at least one of the following conditions may apply. First is that you must be 19 years of age or older, being an applicant. You have or had a spouse or common law partner, or you are or were a parent and live with your child. If any of these conditions apply, then you may be eligible for GST HST credit. Now, what actions are required on the part of the applicant? First of all, you need to file an income tax return, regardless of the fact whether you have earned any income or not. Then in case of new residents, you need to file form RC151, and there is a retroactive effect of this payment. So it means if for certain reasons you have not applied for GST HST credit for past years, then you can apply up to 3 years in the past. So this is indeed a great benefit. Now, what documents may be required? First of all, you need to have a social insurance number to get GST HST credit. In case of new residents who are also submitting form RC151, they may send any of the following documents: copy of the passport, driver's license, visitor card or study permit, temporary resident permit, or any other document issued by Citizenship and Immigration Canada. Now, in case of spouse or common law partner, you can get the credit for your spouse or common law partner, but this credit will be given only to either you or your spouse. I mean, you have to decide whether you are going to get the whole benefit for both of you or your spouse is going to get that benefit. Now, for children under 19 years of age that are assumed to be dependent on you, what is the situation? You can get the credit for each of your children if all the following conditions are met. What these conditions are: that child is your child or is dependent on you or your spouse or common law partner for support. The child is under 19 years of age. He has never had a spouse or common law partner. He has never been a parent of a child they live with, and the child lives with you. Now, there are a few concepts. The concept of base year, payment period. Now, what is the base year? It is the year of the tax return. Payment period, it's the 12-month period during which the GST HST credits are paid. And this period usually runs from July 1st of the year following the base year to June 30th of the next year. Now, here are a few illustrations to explain to you that what is the likely size of GST HST credit under different situations. The first situation relates to married or common law partners. So in this case, if your adjusted family net income is equal to or less than 36,429 Canadian dollars, you are likely to get $280 credit for you, $280 credit for your spouse, plus $147 for each dependent child. Then if your adjusted family net income is greater than $36,429, certain adjustment will be made. You will get $280 for yourself, $280 for your spouse, plus $147 for each eligible child, but there will be a deduction that is equal to 5% of income over $36,429. $36,429. Now, another situation may relate to single, separated, or divorced persons with no children. So, if your net income is equal to or less than 9,073 Canadian dollars, you will get the basic credit that is equal to $280. Now, if your net income is greater than $9,073, you will get the basic credit that is $280, but there will be a deduction that is equal to 2% of income over $9,073. In other situation, if your adjusted net income is greater than $36,429, you will get the basic credit of $280, but there will be a deduction that is equal to 5% of income over $36,429. Now, another situation may relate to single, separated, divorced, or widowed persons who have children. Now, the first situation is that your adjusted family net income is equal to or less than $36,429. Then what you will get is $280 for yourself, $280 for your first child, plus $147 for each additional eligible child, plus $147 additional credit, probably as a bonus. Now, if your adjusted family net income is greater than $36,429, what you are likely to get? You will get $280 credit for yourself, $280 credit for your first child, plus $147 for each additional eligible child, plus $147 additional credit, but there will be a deduction that is equal to 5% of income over $36,429. Now, when you need to contact CRA, there could be four situations when you need to contact CRA. First, number of children in your care have changed, or your marital status has changed, or GST HST credit recipient has died, or if you have moved. I hope you enjoyed this video. For accounting, tax, and business services, you can always send us email at pasca2017@gmail.com, or you can call us at 289-952-3494, or you may like to visit our website at pasca.com.